Welcome to Quick Bite, your fast and friendly Florida insurance.
Hello. This is Roshonda, agency owner of the Isom Insurance Group, right here in the sunshine state of Florida, back again with another Quick Bite episode, your fast and informative insurance market update. Today is Monday, November 10th, 2025, and we're diving into a headline that's got the entire insurance industry talking. Allstate just more than tripled. Let me repeat that, tripled its profits this past quarter, jumping from 1.2 billion in Q3 2024 to a whopping 3.7 billion in Q3 2025. That's not just a glow up. That's a lot of good hands holding on a lot of green. So today we're unpacking how Allstate did it, what it means for the rest of the market, and whether it could signal some stability or maybe relief in the months ahead. Let's jump right in. First, the overview. And for a note, we will be referencing the Insurance Journal article as it relates to this Allstate um, Q3 profits. So Allstate property liability business, that's their main segment, including auto and homeowners, had a combined ratio of 80.1 this quarter. That's more than 16 points better than last year. Remember, in insurance, anything under 100 means profit. So 80, that's like getting an A plus on your underwriting report card. One of the biggest reasons is catastrophic losses dropped from 1.7 billion to just 558 million. That's a 61% decrease. That kind of drop makes actuaries smile and reinsurance managers finally exhale, and agents. In simple terms, Mother Nature gave insurers a little breather this quarter: fewer hurricanes, fewer wildfires, fewer larger loss events. Here in Florida, we know how quickly that can change, but hey, we'll take the win when we get it. And just a reminder, hurricane season still is not over. We've had a quiet one here in Florida, but hurricane season does not officially end until the end of November. Now, let's talk about the real money. Allstate reported nearly 2.9 billion in underwriting income compared to just 495 million last year. That's almost a six-fold increase. Total written premium up 6.3%, which is about 15.6 billion for the quarter. That's roughly 173 million a day. Meanwhile, we're out here celebrating when we buying $2,000 auto policy before 5 p.m. So yeah, Allstate's having a moment. Allstate CEO Tom Wilson credited their transformative growth strategy. Sounds fancy, right? But what it means is basically Allstate is saying we're not going to do business the old way anymore. They're expanding market share in non-standard auto and homeowners, and they're leaning more into the independent agent channel, which is interesting because Allstate historically relied heavily on captive agents only. Now they're reaching customers everywhere, online, direct, or through agents like us, which we do have Allstate from as one of our carriers. Think of it like Target deciding to also sell through Amazon. They're realizing the modern shopper and the modern insurance buyer wants options. Here's where the turnaround really shows. Allstate's auto line brought in 1.7 billion in underwriting income, up from just 486 million a year ago. Their combined ratio improved to 82, nearly 13 points better than last year. And part of that improvement came from the reserve re-estimates. They realized their prior claims weren't costing as much as expected, giving them $480 million cushion. and about 5-point improvement in the numbers. Translation: fewer severe accidents, better claim control, and the rate increases they implemented over the past 2 years are finally catching up. If you're a driver thinking, so will my rates go down now? Probably not yet. But the good news is this kind of result shows we're finally trending toward balance after years of volatility. Yes. Allstate didn't just rely on luck. They also invested heavily, if I could speak today, they also invested greatly in marketing and expanded distribution. They rolled out new rating plans and product tweaks, which helped grow policies in force by 1.3%. Now, that may sound small, but for Allstate, that's massive. That's like saying a city the size of Lakeland, Florida, everyone in it just switched to Allstate in 3 months. When you combine that with better underwriting and fewer losses, you get the perfect recipe for a $3.7 billion comeback. I'll take that comeback any day. Let's shift gears to homeowners, and this part blew me away. Allstate homeowners segment went from 60 million in underwriting income last year to 11 billion this quarter. That's not just a rebound, that's a home run. Their combined ratio improved from 98.2 to 71.5, and written premium jumped to 13.1%, about 4.6 billion. Again, much of this came from fewer catastrophic losses, better pricing discipline. If you're a Florida homeowner, you know exactly how much storm frequency drives these numbers. One quiet hurricane season can completely change an insurer's year. So yeah, when we see profitability, it's not just math, it's weather, pricing, and timing all finally working together. So what does Allstate's big win mean for the rest of the market and for you as a policyholder? When large carriers stabilize, it's a positive signal for the entire industry. It means fewer drastic rate filings, more consistent underwriting, and possibly more appetite returning to certain markets. We're already seeing similar trends from Progressive, Travelers, and even some regionals. Does that mean rates are dropping tomorrow? No. Unfortunately, no. Insurers move cautiously, but it does suggest the worst of the pricing storm may be behind us. Think of this as the insurance world finally seeing sunlight after a very long hurricane season. Here's my take. Allstate's story is a masterclass in patience. They took short-term pain with big rate hikes and tighter underwriting to get long-term gain. It's like someone who spent 2 years meal prepping and going to the gym, and now suddenly all of their old jeans fit again. Except instead of abs, they got 3.7 billion in profits. From a business standpoint, this proves that disciplined underwriting still works. And from a consumer standpoint, it gives hope, definitely hope, that rate stability is coming. So the next time you see an Allstate commercial talking about being in good hands, just remember those hands are holding a lot more cash these days. That's all, folks. If you found this quick bite helpful, please like this video, share with friends, and drop a comment below with any topics you would like for me to cover in future episodes. A quick programming update. As you know, I did not drop an episode this past Friday. And I'm changing our quick bite schedule with the holidays coming and we're getting a little busy in the office. I'll just drop an episode Monday, Wednesday, and Friday at 2 p.m. every week. So Monday, Wednesday, and Friday. This video is for educational purposes only, and you should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional about your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching. I'll see you next time. Please stay safe out there. Bye.
Thank you for watching. Visit us at isomInsuranceGroup.com.